Greetings everyone, Joseph James here with your nightly newsletter brought to you by the schooloftrade.com. Today was August 14th, 2009. Of course, making our way through the second week here in the month of August, trying to stay focused on that volume coming back here first week in September, actually second week in September. Once we get over Labor Day holiday, we'll see volume kick back in and we'll see a lot more trading opportunities. But I want to remind you guys, before we talk about the trades we took today, we have a free resource online. Go to our YouTube page, /School of Trade, and please remember to rate and comment on those videos. Now, we brought in 370 this morning on 4 contracts. That's 4 contract account, which means you could have been trading this today with us for $4,000 in your account and brought in close to 10% of that, right? 370 here in the room today. We took 2 trades, went 2 for 2. We'll show you guys how we did that today, but brings our weekly total to 530, monthly total at 1545. So we'll keep you posted as we work our way through the month of August. Now, the term of the day is multiple time frames. Now, we talked about multiple time frames a little bit here in the room this morning. I want to go over a little more in detail with you guys so you guys know a little bit more about what I mean by multiple time frames and how we use them. Now, multiple time frames, that means more than one. This is a combination of fast, medium, and slow chart time frames, and it's used to identify the highest percentage opportunities in the market. Now, an example of this may be a combination of a 1 minute, a 5 minute, and a 30 minute, maybe an 89 tick, a 144 tick, and a 377 tick, maybe an 8 range, a 21 range, and a 34 range. So as you can see, it's a combination of fast, medium, and slow chart time frames. Now there may be more than just 3, okay, but I don't think there's going to be less than 3 though. Usually a fast and a slow time frame are pretty standard, but we'll want to have something in between there, a medium time frame or even slower time frame. And of course, you could have 4 or 5 different time frames in combination, and that also could work as multiple time frames. We use 3, and that seems to work pretty well with our methodology, but it could be more than 3. Now, again, 3 main components here. A slower time frame, that's going to help you see the big picture. This is where we mark our red or horizontal red major levels of support and resistance. Our medium time frames, of course, these are layers of minor support and resistance. So we use these medium time frames to identify layers of risk, and what we call layers of risk, meaning that this is going to be additional minor layers of support and resistance. And of course, the faster time frame, this is where we execute and manage our trades. We use the fastest time frame to look for price patterns. And those price patterns, of course, we can make better educated decisions about taking those price patterns as trades, because on the faster time frame, we have the luxury of using levels from the medium and the slower time frame. So we speed it all the way up on our faster time frame to get those precise entries. But we don't lose the ability to have the benefit of slower time frames, which of course will show us more important levels of support and resistance that we may want to avoid. So the combination of these 3 allows us to aggressively trade, right, scalping for ticks and points in the market, but at the same time not lose sight of the big picture. Understanding where we are in relation to highs of days, lows of days, value areas, important levels of support and resistance from previous days, weeks, or even months. So multiple time frames, of course, we use in combination to provide more information about the more high probability opportunities. Now, if you want to be a scalper, right, trying to make more trades every day, we can use a faster combination. If you're looking to be a swing trader or a position trader, we can use a slower combination. But we're still going to use 3 fast, medium, and slow time frames, but of course you can speed it up to be a scalper, slow it down to be a swing trader. And the most important thing is that the market that you choose and your particular trading style will determine the right combination. Now, of course, we're going to give you more information about that in our live trade room. We'll make sure you have the correct market and the correct combination of these for your trading style. And now, this is a great example of what this looks like in our trade room. So if you log into our trade room on Monday morning at 7:30, you're going to see a combination of multiple time frames. A slower time frame here in the upper left, which of course this is where we mark those red lines, these major levels of support and resistance. Then of course we have your medium time frame. You'll see we use the trigger line on these medium time frames as additional layers of risk. They are of course minor levels of support and resistance. And then up in the upper right hand corner we have your fast time frame. This of course we look for price patterns, but we have the luxury using our faster time frame because of our line levels indicator moves those levels from our slower time frame over to our faster time frame automatically. So we can of course be aggressive looking for patterns, but at the same time we can have the luxury of knowing exactly where those levels are from our slower time frame to avoid taking trades that would have a lot higher risk involved. Now, of course, in the lower left-hand corner, you'll see one of our proprietary indicators. This is called the pace of the tape indicator. This quantifies actually the speed of the tape. So if you're looking for more information about how to read the tape, this, of course, is going to be one of our proprietary indicators. It's one of our biggest kept secrets. And come out and join us tomorrow morning. We'll show you guys how we use the pace of the tape indicator, as well as the multiple time frames we use in our charts. The live trade room opens on Monday mornings at 7:30 a.m. It does not open at 2:45 on Mondays. The beginner's course is highly recommended for all free trial members. We'll open it up to trial members and lifetime members. Of course, we'll trade the European session at 3 a.m. on Tuesday, but on Monday, we only trade the U.S. morning session. So make sure to come out and join us at 7:30 on Monday morning. We have three very simple jobs, and that is to identify, adjust, and execute. That is, identify our news events in the market we see, adjust to those events, and adjust to the type of market we saw, and then, of course, execute our trades with patience and discipline. We try to remind you guys not to think so much, right? Stop overanalyzing everything and let our mechanical rules do the trading for you. So we simply follow a very simple checklist, almost as simple as baking a birthday cake. Now let's talk about some of the trades we took today. We only took 2 trades today. Summer Friday, month of August. Didn't expect to see very much. We did see some pretty good moves though. A lot of it was very sloppy. A lot of it was on low volume. So the moves that we did see were usually disqualified because of our indicators not lining up or simply not fitting our rules. But our first trade of the day was taken 20 minutes past the hour of 10 o'clock here on the crude. Now, as you guys know, the crude has been probably one of the only markets moving here in the summertime. Gold has been dead, Euro has been dead, DAX has been dead. Okay, so we really haven't had a chance. The Russell's given us a little bit of opportunity, but not very much at all. So the crude's been one of our only markets that's actually moving in the month of August right now. 1020, this is a 2-step long at 21. Now, we had marked this blue line here. I believe it was at 16 or 17 right there, that blue line. So we had to wait to get above that 16, 17. And of course, as you guys know, we look for what we call follow through above that 21 level. Above that 17 level. So 18, 19, 20, getting at 21. We take profit, of course, at 3 ticks, 6 ticks, and then a runner. We take 2 off at 3. We got our first 2 targets at 3 and 6, totaling 12 ticks. So we take 2 contracts off at 3 ticks, totaling 6 ticks there for the first target. Then the second target of 6 ticks, we take 1 contract off, and then we reserve 1 contract on a 4-contract account for the runner. So we get the first 2 targets filled, plus 3 plus 6, which totals, of course, 12 ticks there because we take 2 off at the first contract. We then looked for a 2-step short just before 10:30. Saw nothing but red pot bars, and of course, the word pot bar would mean is pace of the tape. And when we see red pot bars, that means we're not going to take that trade, or in this case, we call this being higher risk. Now, a lot of our members took this trade this morning just before 10:30. They got their plus 3 in scratch, so that would have totaled 6 ticks there for the winner. I didn't take it. A little bit higher risk for my liking here. Of course, having just had a winning trade of 12 ticks, was not going to risk that by giving it right back on a 2-step. That could potentially be a bad idea. But our members did take it high risk there. 1029 there on the crude oil. That was a 2-step short there below that 25 area. All right, now our next trade, which was, of course, our final trade of the day, happened just shortly thereafter, about 35, 40 minutes later, just before 11 o'clock. 10:58 here this morning, a 2-step long. And again, if you look at this kind of pink circle here I've drawn here below that 32 level there, you'll notice we had some higher lows. That gave us a great heads up of this trade. So at 10:58, 2-step long. Entry was at 53. We had a level there at 49, so we had to get through 49 first, as you can see that blue line. We had to get through that swing high first at 49. We got our 49s, then we saw the follow through, 50, 51, 52. By the time we got in, we were filled at 53. We took profit at 3, 6, and 13. So, of course, 6 ticks on the first target, right? 3 times 2. 6 ticks on the second target, right? 6 ticks times 1 contract. And then we trailed the stop using a very simple technique, using our trade management chart. And, of course, that got us to the 13 ticks there for 25 ticks. So there's $250 right there on one trade. One trade, $250. Guys, it happened in a matter of a little bit less than 3 minutes. So very easy to see how this stuff can quickly add up. Make sure you guys come join us in the fall after Labor Day so you guys can see we'll be taking 10 times the amount of trades here you see today. All right, so once again, guys, let's recap real quick. Our trade room opens up at 2:45 a.m. Eastern Time, Tuesday through Friday. Monday morning, it opens up at 7:30 a.m., so come out and join us. The beginner's course is highly recommended for all free trial members. And please, guys, when you're watching this video, please rate and comment. It'll make my day, guys. Send us an email, sales@schooloftrade.com for more information. My name is Joseph James. Hopes the video helps. We'll see you Monday morning at 7:30 in the live trade room. Have a great weekend. Bye-bye for now.